they talk about, small businesses who don't make $1 million. Don't get me wrong, $1 million is a big number. But if you start breaking it up and you think about your business and what you do in your products, you'll be like, wait a minute, I just need to do this to get to that. It opens up a whole new world for you versus be like, yo,
I'll never make it.
I'm not going to break $1 million. You can break $1 million in your business.
Today, we want to talk to you about your future and how you can stay in the green, how to make a profit in business and to keep it, and to give you some very specific examples of things that we've done within our businesses.
Oh, yeah.
To get on the road to profit. So today we're going to talk about
struggle, man.
Long-term profitability, and especially for people who are new to business, new entrepreneurs, new business owners, some things that you can think about and some advice to help you be profitable over the years. So, Chief, what do you want to share with the people? Any instructions?
Yeah, there's so much you talk about this when you talk about building a business and starting a business. There's so many different aspects and thought patterns these days, and what people put out there, social and the internet and just in general. But I'm sure we'll end up diving into it. But the thing I think about it the most is whatever money your business generates. I didn't say make, it generates, that you use every dollar of it as wisely as possible. And, that's just speaking from experience from, whether it's at JSB, back when I was doing real estate, or even when we were building the Soap Box, like every penny counts. Like, yeah, don't nickel and dime your business. Like, oh, this is only $20. This is only $50. This is only $90. It's $300. It adds up really fast depending on the size of your business. And some stuff you spend money on could be a part-timer's salary at your business for the week or bi-weekly or whatever your pay cycle is. So be mindful of those purchases.
So I'm going to jump in and just, some of my favorite reference tools include the Merriam-Webster dictionary.
Here comes the blue screen.
And so Merriam-Webster defines profit several ways. One is a valuable return, or an excess of returns over expenditures, the net income, usually for a given period of time, the compensation accruing to entrepreneurs for the assumption of risk in business enterprise as distinguished from wages or from rent. And so as entrepreneurs, I think that's the definition that resonates most with me, because sometimes we don't talk about how the things that we do to run our businesses, it's mitigating a risk. And so as a result, there's value in that. And it's often not, people don't often discuss the monetary value of that risk, but that can indeed be profit.
I like to look at it and listen, finances are important when it comes to running a business, but I like to boil it down as simple as I can. And, the Soap Box is a good example. JSB is way more complicated on the finance side just because of the nature of the business, the number of people, the complexities. But, I like to use the box as a good example. And I think it was a good, excluding real estate, because that was a little different. But the box is was a good example for me to really look at finances and drill down into them. But I like to look at it and say, how do you boil it down with your business to the simplest, points? This is everything that's going out, and this is everything that's coming in. Subtracted, and that's what's either left over or when I'm in the hole with that I need to figure out, on a weekly or monthly basis. How do I get that positive? Or this is what's left. How do I take what's left over, the profit, and either reinvest it or take it out the business? I'm going to put it back.
So to summarize what you just said, in your business, you want more coming in than it's going out.
100%. So to me, that's the easiest way to look at it. And I get it. Like, there's the financial statements, your balance sheet, your profit and loss. You should know that. I'm not taking anything away from that. You should be knowledgeable of your numbers and how to read these different statements, especially depending on the complexity of your business. But I'm talking about you got a medium size, a small business. all that aside, figure out how to boil it down. Like, go to your bank account, look at your statement for the month, right? How much went out and then how much came in. Like, that is, I think people greatly overlook that. It's an easy starting point for you to kind of get a handle on what's going on. I got $300 going out every month and I only got $299 coming in. I need to clearly figure out how to make $1 so I could break even more per month. And then anything above that puts me at a profit.
Well, there's a gentleman named Michalowicz, and he wrote a book called Profit First, which puts a different spin on how you should look at profits than most people do. When I read it, it just kind of challenged me to not necessarily accept the status quo in the conversation around profit, because he kind of stresses that profit is a made up number, like it's something on paper and not necessarily real.
I can agree to a certain extent, because where I get really annoyed, and this is what should annoy a lot of you other business owners, when you go to your, whether it's a CPA or whoever your tax professional is or your bookkeeper, and they tell you made a profit, but it's a paper profit. If anyone ever tells me that again, I will lose my mind.
And by paper profit, it means that on the business reports, the financial reports, a profit is demonstrated. However, that profit doesn't necessarily trickle into
right. I'm like, if you show
bank.
me on the profit and loss statement or the balance sheet or whatever, the financial document we're looking at, and you're saying, oh, guess what? You had a $300,000 profit this year. I'm going to be like, here's my bank account, and it better say 300,000 plus in it, the 300 for my profit, and then whatever else I got in there as my operating money. Mm-hmm. But I better not pull out my account and be like, oh, you told me I got $300,000 profit, but I only got $5 in my account.
Right.
Like, and that's why I say I can agree when you say he says it's a made up number, he says, or a term.
Basically. And he goes on to say that basically, if you understand what your tax liabilities are going to be and have some kind of sense of what your other bills will be, you should pay yourself first, put money aside for your taxes, and then you should figure out how to plan the rest of your expenses.
If you know exactly what's going out, and you know exactly what's coming in, to me, it's a simple model. And you said it. Know what are my tax? If my business generates $300,000 this year, 500,000, $1 million, etc., my tax liabilities will be X. I'm only going to generate this much. Those tax liabilities need to be covered. So technically I'm at a deficit because I didn't make enough money to cover these tax liabilities. But if I'm generating $1 million and I know my tax liabilities, are 100,000 and all my expenses add up to 6,000, that's 7, I got 300 profit. I'm good. I don't think it's super hard. The thing is just taking the time and sitting down and then figuring it out. And you got to have a good, money person on your team, bookkeeper, tax accountant, a tax professional.
But
whomever.
Somebody who understands the laws of money, right? Because that's going to be important for you or being successful. I encourage everybody to learn about money themselves. As a matter of fact, I was listening to Jamie Dimon, who is the CEO at JP Morgan Chase. He's the only banking CEO here in the United States who led one of the major banks through the crash of 2008, who's still in his position. He said that his father taught him how to read a balance sheet when he was 13. And so just his level of knowledge about how money works was ingrained to him at a very early age and has been instrumental in him not only growing into the role at Chase and making Chase a behemoth of a banking institution. I think at least 50% of people in the United States.
It's some crazy number. I can't remember 50, 25% goes through Chase.
Through Chase.
Yeah.
And so if it works for Jamie Dimon, who do we need to be having conversations with to better understand money? Where do we need to go to learn how to really read a balance sheet? And then how do we translate those skills into running a profitable business? So if you don't have that information for yourself, make sure you have someone on your team, whether it's a paid confidant, a paid trusted advisor, or it's someone in-house who can do that for you. And then figure out how to get those skills for yourself. So Cope, the team wanted us to talk about our businesses and whether or not our businesses are profitable today.
Yes, thank God they are. Go. What were you going to say?
Well, I was just going to open up the door.
Oh, you opened it. I'm coming in waving.
Kicking the door, waving the 4-4.
Biggie Smalls, shout out. Yeah. So, yeah, you talked about Chase, Jamie Dimon. So there are some similarities between big business and small business, but, we really want to focus on small business. You starting a business or you have a business and you're like, it's tough. So we want to talk about real world experiences and what we did. So you took over Johnson Security up 10 years ago.
There was money in the bank. We had active clients. The challenge was we weren't billing our clients in a timely manner. We weren't booking what we billed them. So in other words, we weren't capturing the data regarding our invoices so that we could follow up with clients who didn't pay.
Right.
And so it took putting systems in place because those systems were not there. And initially we started off using Excel. And then we grew into using QuickBooks and, paying for a trusted advisor to do our bookkeeping and to do our tax filings. But it's very important that you know what is going out, but that you know what's due to you and that you get that money in a timely manner. I was just laughing before we started recording. I got an email regarding some outstanding client invoices. I initially emailed this person in December. Here it is, March, and they're trying to see if we have any resolution to the matter.
Right.
So if for your business, think about, can you go 3 months without getting paid for your services? Even if it was just one client, what cost is it to you to have to front that money, either make a cash infusion or not be able to pay people or purchase items that your business is going to need because someone didn't pay you? So make sure that you put systems in place so you can track what's going out, you can track the value of the services that you provided, and you can track what you're billing clients. And when that money comes in, so that if they're not paying you, you could cut them off, which we had to do early on.
Right. So speaking to what you said earlier, so your numbers might be right, which would lead to you being a profitable business. Your bill rate is right. What you're spending to pay your team members or, your expenses to get it done if you're a solopreneur or whatever the case might be, your numbers might add up. So when you do the math, you're like, I got this much of a profit, 15, 20, 30%, whatever it might be. But if your systems aren't in place to get that money coming in, you still will not be making a profit. So it's not just about the numbers making sense. It's about your processes making sense to make sure the invoices go out on time, that those invoices are followed up on if they don't get paid on time by the client, because that's going to hurt your cash flow. You could have a client owing you $1 million, but if you're not collecting on it, when it comes to the end of the month, the end of the quarter, the end of the year, you're not making a profit. If I have a client who owes us whatever amount of money sitting in collections, it's not a profit for me. I can't use that money. Right. I'm hoping they'll pay, but suppose they never pay. So think about your profit two ways. Your numbers make sense and will add up to a profit, but your practices and your procedures have to make sure you get that money that will turn into a profit. So that was the issue we started with JSB in the beginning.
And if your goal is to grow your small business and you want to ultimately do business with large corporations and other large entities, they may want to understand your financial systems. And so I've had to explain to prospective clients how we keep our books and what standards we use. They want, are these generally accepted accounting practices?
Yeah, whatever. But you know what? And I'm getting a little salty here because I get it. You want to work with these large businesses, so it adds up to your portfolio and you can increase it. But let's be clear. Some of these businesses or partners that want to JV with you or potential clients, they're going to try and ask you to do stuff that they wouldn't ask other businesses, their other vendors to do who are larger than you. And I'm not saying don't do it, But just be mindful. Some of them want you to fill out all these statements. They want you to give them documentation. They want you to open your books up to them. But are they going to open up their books to you? And listen, I get it. You probably, I know what you're thinking. Like you want to get this client, you want to get this business, but be careful how much you divulge to get that business. You know, in security, I've seen like they talk about these subcontractor opportunities, and it's in other trades and professions too. And then they want you to fill out all this pre-qualification information. You know, what's your gross revenues? What's your profit? Send us a copy of your tax returns. Bump that. You want to work with me for my services. I know you want to vet me to make sure that I have stability. Like if I start working with you, I'm not going to go out of business next week. But if I go to open up an account at Chase, I can't barge into Chase's office and be like, hey, I want to see your well, technically I can't see the statements because they're a public company. But there's some documents I can't see. I can't go to, I don't know, some company that's not publicly traded and be like, listen, I want to do work with you. I want to see all these things. So I'm not saying don't do it, but I'm like, be very mindful of it and don't get so caught up in giving out all your information, because remember, it's your company. It's a private company. You're building it and doing it for whatever reason, and you don't know where that information is going to show up later on.
Let's bring it back. Talk about the soapbox and the soap profitability there.
So let's talk. Yeah, that's a good example, because we talked about profit being on paper, in the sense that your CPA or whoever does your taxes says you made a profit, but you're like, where is it in my account? Or your numbers generate to a profit when you do your calculations, but because of your practices and your procedures, you're not getting that revenue in to actually have a profit. But the other times you could be making a profit or not be making a profit, if you choose to do things in your business that's going to cause you to lose money because you're trying to scale, you're trying to grow, or you're trying to expand, you're reinvesting the money into the firm. So we do that at the Soapbox. So, and I think a good example where people could relate to is like Amazon. There's this, I don't know, I can't remember what interview it was, but Bezos talked about how they were losing money periodically and he was catching smack about it. But they had done the back end calculations to say, we'll burn money for this long, but when we reach this number of clients or this number of sales or whatever the metrics was, matrix, whatever the metrics were, that they would become profitable. But everybody wasn't aware of that number. Everybody wasn't aware of their plan, their vision, their goal. So they ridiculed and talked about it. So if tomorrow at the Soapbox, we decided to say, hey, let's not expand into this neighborhood, or let's not do this anymore, or we're going to cut back and release these team members. Yes, instant profitability, like overnight. But the goal for us is long-term. We're reinvesting the money that it generates back into it to go into other areas, to improve the service, to improve the product, to pay the team members more than what the average laundromat is probably paying them. So we're spending money on different things for it to pay off in the long run.
So do you have a target time frame as to when that profit is coming?
Oh, let's say, well, we're in negotiations with some potential partnerships now that I cannot discuss due to NDAs. No, I'm just kidding. You know how I feel about NDAs. But our target right now, if we choose to change our model, if we continue to the same model and we don't adjust for bigger goals, we're probably there in like 8 months, give or take. Or possibly, not even 8 months. Like, what is this, March?
Yes.
Yeah, if we don't change, because we've pivoted quite a few times, but the previous pivots put us closer and closer to where we want to be. Probably the end of this year. And that's staying focused on our game plan. But if we change the game plan and just stop trying to grow and reinvest using the Amazon model, could be next week. Like, because we're stop putting resources into these things that we're looking to for the future. But people need to be mindful, because don't get caught up on these businesses. That's money knocking at the door right now, ringing the bell. People get caught up on what you hear and see about these businesses that are in the news or in social. And you need to be clear and understand the different dynamics of each business. There are a lot of businesses out there today who are not making money. Just because it looks like they're making money, or you see them opening up another store or another location, or they have, these comfy looking offices and all these different things. Don't assume that means they're making money. They're generating some money, but does it mean they're making a profit at the end? And a lot of companies, they are raising money. So they're burning through money to get to the next round of funding. And then they use that money to get to whatever the next round is, because their goal might be different than yours. You might be looking to build this business to generate income for your family, or for you to retire off, or whatever your goal might be, where their goal might be, I need to build this up to this many clients, and then I hope to get acquired by Amazon, or I hope to get acquired by, Boogly Boogly firm, or, Facebook or Zynga. I don't know. Like, that might be their goal. So they're not concerned about making a profit, because they're like, I just need to get a bunch of users, or I need to get a bunch of clients. So then I look attractive to somebody else to say, we're going to buy them for their clients.
So what 3 tips can we give the people out in Commerce and Chill Land on how they can direct their business towards profitability? Let's hit it and quit it.
My first thing is, like, bookkeeper, CPA, tax professional, whoever it is, make sure they know your business and they work with you with your numbers. Don't get somebody to just be like, here's your numbers at the end of the year. Like, you want to sit down, someone who sits down and goes through it, and their concern is, hey, you made this much, but hey, what about it? What is this big expense you have here that says software? I noticed that's like 30% of your bottom line. Is there some way you can break that out and like trim the fat on that, or not spend as much on it? Like, they should be asking you questions, and you should be asking them questions. So yeah, someone who's a financial professional.
And I'll add, as a kind of a follow-up to that thought, you want to be checking your numbers regularly. At a minimum, once a week.
I live on Chase.
Numbers. So what's the summary for how much came in?
How many times you check the accounts a day?
3.
3.
At
least 3. I check it first thing in the morning. I check it in the middle of the day, and I check it in the evening at a minimum. Sometimes I check it more. And some of you are probably like, why are you looking at your account so much? Because first of all, if you're doing what you're supposed to be doing, you should have income coming in your account on a regular basis. Now, you might have a cash business, I get it, but you should have something coming in on the digital side. Like, be smart about it. ACH, Zelle, Cash App, Venmo, like Wire, whatever it is, you should be using these different means to have this money coming to you as quickly and efficiently as possible without you incurring as many fees. I mean, even credit cards. But there's process. You should have that money should be, you should make it, the friction for your clients to pay you should be as little as possible. If they prefer to pay by PayPal, take PayPal. What is it going to cost you? Sorry, I got to stop dropping these F-bombs. I'm getting in trouble.
Generally, when it comes to your personal finances, people are taught to think about April 15th, right? And so you do whatever you do for a whole year, and then January 1st, you get the letter from your accountant saying, oh, I need to see your documents. No, when it comes to your business, make sure you are regularly checking the financial health, whatever those metrics are, income, expenses, profitability.
I'm like every day, like I'm looking at what's coming in the account.
Profitability every day.
I look at the bank account every day. Like I see debits. I'm like, oh, who's this that just charged $93 to the Soap Box? What's this? One day there was a debit the other day for $1.28 at the Soap Box. I was like, what is that? What is $1.28? Sorry, what is $1.28 from? And then I realized it was a test purchase that we did because we're testing some new software. But I'm like, $1.28 over time adds up. So if you're not looking
check for the little things that go through the cracks.
What happened when we spent whatchamacallit? I found $1,000 worth of seepage on the store's account back in the day. I just sat down and looked at all the statements for 3 months, and I was like, what is this? Some reoccurring subscription that we had for some software that we weren't using and some other ones. And I was like, if we get rid of this, it added up to $1,000 a month. Was
that Vanessa from the exercise you did with Vanessa Lindley? Shout out to Vanessa Lindley.
She was in the small biz 30-day challenge, which I'm currently slacking on, but day 15 and 16 will be dropping soon.
365 small business. What last tip do you have for the people, Chief?
So you got a professional, a financial professional.
Check your numbers regularly.
Check your numbers regularly.
Take your temperature. What's your financial score?
My third thing would be to make sure you're towards profitability is make sure that you're involved in your business on a regular basis, that you know what's going on. You got a business that has a cash register. You should have systems and procedures in place so you're checking and balancing that.
That's a whole nother episode.
It's a whole nother episode. But if you got a cash business, you got people running cash registers. They should be counting in and out. You should have a way of auditing that system. I was in somebody else's store like a couple weeks ago, and they were having some issues with their POS, and I was like, yeah, click here, do this. And then I looked and I was just like, holy shit, y'all don't you don't close out the drawer? And they were like, nah, we just run one drawer for everybody that works here. I was like, so how do you know if somebody's stealing money out the drawer? Like, you have to reconcile. So yeah, systems and procedures in place, have balance and checks.
Here's a relevant statistic. According to Business Know-How, in 2018, only 9% of small businesses made more than $1 million. And while the least profitable 16% made less than $10,000. You want to make a profit, and most people go into business because they want to make money. So keep an eye on those profits so that you can drive your business bus to that destination, which is financial success.
Yeah, so really what you should do, and I'm done, I see this, you say 16% of the small business made less than $10,000. Granted, a lot of small businesses, it's just one person. They're self-employed. But you really should look at how much money you want to make for the year and break that down to a daily number. Because I believe, off the top of my head, my math is probably off. But if you make like $278 a day, I think that adds up to like $100,000 a year. It ain't hard to make it's hard, but it ain't hard to make $278 a day, depending.
If you put it in perspective.
Right. I'm saying if you put it in perspective, how much money are we spending on stuff on a weekly or daily basis? And you sat down and said 278, if you spend let's just say 8 to 10 hours working in a day, and you broke down 278 or 274, whatever the number is, and you divided it by that number of hours, and you'd be like, roughly, I need to try and figure out how I can generate like 20 something bucks an hour, roughly. Like, it's so doable when you think about it in that nature. So they talk about, small businesses who don't make $1 million. Don't get me wrong, $1 million is a big number. But if you start breaking it up and you think about your business and what you do and your products, you'll be like, wait a minute, I just need to do this to get to that. It opens up a whole new world for you versus be like, yo,
I'll never make it.
I'm not going to break $1 million. You can break $1 million bucks in your business.
In a previous episode, we mentioned to be in the top 1% in this country, you only
have to need like 440,000 or something a year.
Can you do that? I think you can. What's 440,000 divided by 365?
Think about it.
Or if you only want to work Monday through Friday, what's that number? You can do it. One last point as we close out. One tip that I've neglected to mention earlier.
Figure out how your business can make money when you're not working.
The investment you can make towards your business profitability is to invest in your own financial education.
And your team.
Get books, go to classes, spend it on the people
them pizza.
who know.
Give them cookies and snacks.
But take some of your money
they will love you.
Invest in learning about how
shout out to the snack team here at JSB.
You can be financially fit, and that will help you get on the path to profitability for your business even faster. It's been great visiting with you. Thanks for stopping by Commerce and Chill Land. I'm Jessica Johnson Cope.
I'm Waleed.
And here's to seeing you at the bank.
Yep, let me go make a profit.